Welcome to our video on tax planning. Effective tax planning is crucial for businesses of all sizes. If you're looking to maximize profits and gain an edge over your competition, then this video is for you. But that's not all. We aim to help businesses like yours learn everything they can to make the most of their finances. In the description of this video, you'll find a link to our downloadable ebook on tax planning, available for instant download after purchase. So hit the like button, subscribe, and share this video to start benefiting now. Proactive tax planning involves being proactive throughout the year to reduce tax obligations. You need to analyze your income and potential deductions. Additionally, look for tax credits to offset taxes and stay informed about tax changes. By understanding your income sources, potential deductions, and available tax credits, you can minimize tax liabilities and maximize tax benefits. Additionally, proactive tax planning can alleviate last-minute stress during tax filing season. Staying proactive with your taxes throughout the year can provide several benefits, such as reducing the chances of overpaying taxes and avoiding unnecessary penalties. By planning ahead, you can make informed decisions about your financial situation and ensure you are maximizing your tax deductions and credits. Additionally, staying proactive with your taxes can help you stay up to date with changes in tax laws and regulations, allowing you to adjust your financial planning accordingly. Overall, proactive tax planning is a smart and effective way to manage your taxes and potentially keep more money in your pocket. The benefits of proactive tax planning extend beyond just reducing tax liabilities. It can also help you avoid costly surprises when tax season rolls around. By strategically planning and making informed decisions throughout the year, you can better manage your financial situation, avoid overpaying taxes and unnecessary penalties, and ultimately keep more money in your pocket. Additionally, being proactive with your taxes enables you to stay up to date with changes in tax laws and regulations. This can help you adapt your financial planning accordingly and take advantage of new opportunities as they arise. Beyond just reducing tax liabilities, proactive tax planning can provide peace of mind. And staying on top of your financial situation, you no longer have to worry about unexpected tax bills or penalties. This can reduce stress and allow you to focus on other aspects of your life. As an added benefit, proactive tax planning can even open up new opportunities for financial growth. By leveraging deductions, credits, and other tax-saving strategies, you may free up resources that can be used to invest in your future. Furthermore, proactive tax planning can create opportunities for tax savings that may not have been realized otherwise. By understanding the intricacies of the tax code and taking advantage of available deductions and credits, you can potentially reduce your tax liability and keep more of your hard-earned money. In addition, proactive tax planning allows for greater control over your financial situation. Rather than scrambling to gather documents and paperwork at the last minute, you can take a proactive approach to managing your taxes and ensuring that your financial records are organized and updated throughout the year. When analyzing your income sources for tax planning purposes, it's important to consider all potential income sources, including employment income, business income, rental income, investments, and any other sources of income. By identifying each source of income, you can determine which portion is subject to taxes and assess the potential tax implications. Once you have identified your income sources, you can then begin to analyze them in greater detail. This may involve breaking down individual income streams into categories such as salary, bonuses, dividends, capital gains, or rental income, etc. By analyzing each income source individually, you can gain a deeper understanding of the potential tax implications for each, and determine which deductions and credits might apply. Additionally, analyzing your income sources can help you identify areas where you may be able to take advantage of certain deductions or tax credits. For example, if you have a significant amount of business expenses related to your income, you may be able to deduct those expenses from your taxable income, reducing your overall tax liability. Similarly, if you have made certain purchases for your business, such as a vehicle or office equipment, you might be able to claim tax credits for those expenses. Deductions are a key aspect of tax planning, allowing you to reduce your taxable income and ultimately reduce the amount of tax you owe. Common deductions include things like charitable donations, mortgage interest, state and local taxes, medical expenses, and business expenses. To ensure you maximize your deductions, it's important to keep detailed records of your expenses throughout the year, including receipts and other documentation. When claiming deductions, it's important to be aware of the rules and limitations set by the IRS and any other relevant tax authorities. For example, there may be maximum limits on the amount you can deduct for certain types of expenses, or you may only be able to claim deductions for certain expenses if they are directly related to generating income. Being aware of these rules and limitations can ensure you're claiming the right deductions and not exceeding the allowed amounts. Furthermore, you should also consider timing when claiming deductions. Certain deductions, such as those for certain business expenses, may only be claimed in the year in which they were incurred. Other deductions, however, may be able to be carried forward to future years if you are unable to utilize the full amount in the current year. Taking these timing considerations into account can help you maximize your deductions and minimize your tax liability. Credits are a type of tax benefit that directly reduces the amount of tax you owe. Unlike deductions, which lower your taxable income, tax credits reduce the actual amount of tax you owe, dollar for dollar. Common tax credits include the Earned Income Tax Credit, the Child Tax Credit, and the American Opportunity Tax Credit for education. Some tax credits are refundable, which means you can receive a refund even if your credit exceeds the amount you owe in taxes. Others are non-refundable and can only be used to offset the taxes you owe. By utilizing tax credits to their maximum potential, you can significantly reduce your overall tax liability and potentially receive a refund. However, it's important to ensure compliance with all rules and eligibility requirements for each tax credit you are claiming. Additionally, some tax credits are temporary and may expire or change from year to year, so it's important to stay informed about the status of each credit you intend to utilize. Finally, when analyzing your tax situation, it's important to consider both federal and state tax laws and regulations. While the IRS sets federal tax laws, state governments may have additional taxes and exemptions that apply to your situation. By understanding both federal and state laws, you can ensure you are in compliance and taking advantage of all available deductions and credits at both levels of government. Staying informed about changes in tax laws is another important aspect of proactive tax planning. The rules and regulations for income tax deductions and credits can change on a regular basis, either through updates to existing laws or new laws being implemented. By staying up to date on any changes to tax laws, you can ensure you are staying compliant and maximizing your tax benefits, rather than unintentionally violating laws and potentially being subject to penalties. Additionally, keeping up to date with changes in tax laws can also help you take advantage of new opportunities as they become available. For example, in recent years, the IRS has offered several new tax credits and deductions specifically designed to encourage charitable giving, green energy investment, and other socially responsible behaviors. By staying informed about these changes, you can ensure you are taking advantage of new benefits as they become available, rather than missing out on opportunities to reduce your tax bill. Finally, staying up to date on changes in tax laws can also help you plan for the future and avoid unwelcome surprises. By staying informed, you can anticipate changes in tax laws and adjust your financial planning accordingly. This can help you minimize the impact of any changes on your overall financial situation and help you make proactive decisions to reduce your tax liability in the future. An effective proactive tax planning strategy can include income deferral, investing in tax-advantaged vehicles, retirement planning, and optimizing asset allocation. Income deferral involves deferring income recognition until a future tax year, reducing current year taxable income. Tax-advantaged investments offer tax exemptions or deferral on interest or dividends. Retirement planning includes tax-advantaged accounts for tax-free income in retirement. Lastly, tax-efficient asset allocation involves strategically placing investments in taxable or tax-advantaged accounts to minimize overall tax liability. Thank you for watching our video on tax planning. To get our downloadable PDF on tackling your taxes effectively, visit the description for the purchase link. And don't forget to hit like, subscribe, and share this video. Your support helps us continue to provide valuable resources to businesses like yours.